take a look at what happened with Wall Street, right?
Absolutely.
Because it's been quite the action-packed week there as well. So when you take a look at stock futures, though, you're looking at slightly higher moves coming in. So whether you look at a Dow, that saw an uptick of about 0.2%, and S&P 500 as well as Nasdaq also, in terms of a futures basis, are indicating an uptick of 0.1% thereabout. Now, investor attention, of course, is shifting to second quarter earnings, and there's a lot of earnings that are lined up, and that is also the catalyst that the market is at this point keeping on its radar. But let's also take a look at what really happened in the week gone by and the kind of action that we saw. So let's take a look at the blue chip Dow, and when you're looking at that one, you see a fresh all-time high above 40,000 coming in for that one on Friday, bringing its 2024 gains to 6.1%. So that's a good year coming in for Dow, as well as a good move for that particular index. Let's also take a look at the S&P 500, because that one also saw gains of about 18% coming in 2024 to a new record, powered by tech giants. And that is the larger story, Snehi, that we've seen play out with regard to the S&P 500. Even the Nasdaq also is indicating a little bit of a story there. The major equity benchmarks just came off another solid week as easing inflation data fueled rate cut bets. So that is something that the market is keeping on its radar after that US PPI data. And the S&P 500 then gained about 0.9% last week. So that's the move that we saw coming in last week, scoring its fifth positive week in 6, and that is the kind of move that we saw for S&P 500. Nasdaq, like I mentioned, also rose about 0.3% during the same period, but the real outperformer was the Dow, because that was the relative outperformer, gaining 1.6% for its best weekly performance since May 10th. Now, this is as investors started to embrace a broader array of stocks than just technology names. So it does look like the rally is just sort of widening at this point, but let's really see how that pans out. You also have results from some of the US big banks that kicked off the reporting season on Friday that were mixed. So whether you look at a JP Morgan or Citigroup, both topped Wall Street expectations for earnings and revenue. But when you take a look at Wells Fargo, then you're looking at a decline in net interest income that also disappointed investors. So that largely is the kind of roundup that we saw in terms of bank earnings. And there's a lot to keep on our radar, Snehi. But tell us first about oil and gold then.
Absolutely. First, let's take a look at what oil prices have done, and slight bit of a negativity or slight bit of cuts being seen on that front, because if you take a look at what WTI is up to right now, $81.85 a barrel, very close to that $80 per barrel mark. That's where WTI has come down to. Brent also under 85 at $84.67 a barrel is where Brent is trading right now. Let's understand what has led to all of these. And crude oil futures, like I mentioned, they've fallen. They've snapped a recent 4-week winning streak, as this rally that we've seen recently has lost momentum. Prices rose earlier in the session after 2 days of gains, as June consumer inflation eased to around its lowest level in more than 3 years. So that was an important thrust when it came to oil prices. And that also bolstered hopes for the Fed Reserve and there were hopes that it will cut interest rates this year, as well as stimulate demand for oil. But futures ultimately lost momentum later in the day. I'm talking about Friday, and after a measure of that wholesale price index, the WPI rose 0.2% in June, slightly higher than the 0.1% uptick that economists were expecting. So that is what has negatively fed for crude prices. US crude posted a loss of 1.14% for the week that went by. Brent down by 1.74% as well. But US crude oil and gasoline inventories also fell for the week ended July 5, in a sign that summer fuel demand may be finding some life. Now, you also have another player that comes into picture over here, and that is OPEC. OPEC and the International Energy Agency, which is the IEA, however, they've sent conflicting signals again on where demand is trending this year. And the cartel of producers is bullish. They're seeing demand increasing by 2.2 million barrels per day this year on solid economic growth. The bloc of largely Western states, on the other hand, sees demand growing just under 1 million barrels per day as the global economy softens, particularly in China. So lots of geopolitical factors as well as market factors such as demand and supply coming into play. There's some mismatch coming in from two of the biggest oil producers. You have the Western Bloc as well as OPEC giving very contrasting projections when it comes to oil demand. And on the back of that, along with the WPI as well as the gasoline and oil data that we did see coming out of the US last week, that is what has fared negatively for oil prices. So well, that is where oil is as of now, and lots to watch out for on this metric as well. But when you take a look at gold also holding above that $2,400 per ounce level. It is on its way for a third weekly rise, but as of now trading with cuts of 0.3%. That's where gold is at, Shreyansi.
Well, absolutely, and let's kickstart the
If you like this video, then like, share and subscribe to ET Now.